Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has fallen significantly in the last 5 consecutive days, and as we can see now, the market is finding support close towards the region of 63.35. Since breaking the 60-day moving average on the way down, falls are appearing to be returning, not fully breaking down from the technicals. Could see a further week, that is, see a move towards 64.05. It is crucial to see that break as a move beyond 64.05 could see a rise up towards 64.65 or 65 cents. With that being said, a close under 63.35 would give further indication to the bear case, as this market is heavily since last week, since the RBA was more hawkish and lifted interest rates by 25 basis points, and still suggest there may or could be a couple more to come, as we now sit around 4.35%, 4.35%. Nevertheless, like previously seen from the base around 62.80, a bounce or where the balls may be situated, and therefore could see a further rise. Overall though, I'm not bearish as we get lower towards 63 cents, and I do expect to see a correction. Moving on to the euro, we can see this short-term uptrend, which is around 105.90 to around 106.05. I do like the way this pattern is slowly forming to a potential bull case, and therefore could see a move up towards 107.30. I would like to see a clearance of that to ignite the move up to 107.75, and then on towards my call of 108 to 109. What could turn this all around is we keep an eye on the dollar index, which measures the greenback strength against a basket of 6 major currencies. As it trades around 105.60 area, is that a break of 106.15 would negate the topside call to the euro and therefore see it plummet back towards 104. But I don't see that as of yet, as the technicals are still firm when it comes to looking at the euro. Looking to this week, the Eurozone is looking to post its GDP. Along with that, we've got the US inflation figures, which are the CPI and the PPI. And also, market will be concentrating also on the ECB commentary as well. Dollar yen, the market is heading back towards 151, and previously where the rejection was. In terms of how the technicals are looking, a little bit of divergence here, but the evidence of any pullback is not quite there yet. But as long as 151.90 holds, then I feel the market could see or potentially appearance from the Bank of Japan. After previously talk of an intervention, no confirmation to that call though, that we could see due to the weakness of yen, we may see some defense from the Bank of Japan, and therefore could ignite the move down to 148. Nevertheless, beyond 151.90, I'm neutral while intact. The call is to the downside, and let's see if we do see any kind of decline, and that is towards this firm support that I'm viewing at the moment. Sterling a little bit weaker, but close to a dragonfly doji, the market could actually display a little bit of firmness into this week, and therefore look towards a region of 122.60. A clearance of that will give further scope up towards 124. The gold outlook, well, the market crushed the level, and as we can see here, where there was a bit of a whipsaw price action this morning, or more like a flash crash, as we can see here on the opening. Nevertheless, the market still looks like it could test towards that bottom side of the range around 1,924. Not quite sort of displaying this current pattern, but there is bullish divergence here, and I'm a little bit cautious of how this candle was forming. Still, the break of 1,950 could see the market return to a bearish case. Wrapping up with oil, the market is holding clearly above that support level of 74.5. After 3 challenging days, the market is still respecting. Keep a close watch on the RSI, as another rejection would see the market return to the bottom side of the range. But I feel the bulls are still guarding this area, and if we do see a break above the region of around 78.25, then that would give further indication up towards $81 a barrel. Well, that's a wrap for the start of this week. Thank you for joining me, and as always, look out for the intro report, and I hope you enjoy the great start to the day.